Let's talk about accounting. Yeah, I know, not the most thrilling topic on the surface, right? But stick with me because today we're diving into a conversation that's stirring up quite a bit of buzz in the industry: the impact of artificial intelligence, or AI, on accounting. Now, I can already hear the skeptics and the enthusiasts gearing up for a debate. On one side, you have those who believe AI is going to revolutionize the industry, making accountants more efficient, more valuable, and maybe even a little less stressed. On the other side, you have the naysayers who worry that AI could put accountants out of work and disrupt the industry in ways we can't fully grasp yet. So let's break it down and see where we land. First up, let's talk about automation. You know those boring, repetitive tasks that make you want to pull your hair out: data entry, invoice processing, bank reconciliations. Well, AI is stepping in to take over those tasks. Imagine a world where you no longer have to spend hours entering data or matching records. Instead, AI tools can handle that with speed and accuracy that would make any human envious. What does that mean for accountants? More time to focus on the interesting stuff like financial analysis and strategic advisory work. No more drowning in paperwork. Instead, you can actually engage with your clients and help them make informed decisions. Sounds great, right? But hold on a second. While automation sounds fantastic, there are challenges lurking in the shadows. Integrating AI into existing systems can be a nightmare, especially for firms stuck with outdated software. And let's not forget the accuracy concerns. AI isn't infallible. If it misinterprets data or doesn't understand the nuances of accounting rules, it could lead to some pretty costly mistakes. So, while we're dreaming of a world where we're free from mundane tasks, we have to recognize that we still need human oversight to catch any errors that might slip through the cracks. Now, let's pivot to accuracy and error reduction. One of the biggest advantages of AI is its ability to detect errors in real time. It can monitor transactions, flagging anomalies that might indicate fraud or discrepancies. This means fewer mistakes in financial records and compliance filings, which is a huge relief for accountants and clients alike. But here's the kicker: AI's effectiveness hinges on the quality of the data it processes. If the data is flawed, the AI's output will be too. In training AI to understand complex accounting rules, that's no walk in the park either. So, while we can dream of the future with perfect accuracy, we need to remember that human judgment is still crucial in this equation. Now, let's talk about financial forecasting and analysis. AI can sift through mountains of financial data, identifying trends and making predictions that would take a human hours, if not days, to unravel. Predictive analytics can help accountants forecast revenue, expenses, and cash flow, allowing businesses to make more informed decisions. But, and it's a big but, AI relies heavily on historical data. If the market shifts unexpectedly, or if there's a disruption that wasn't accounted for, those forecasts can go out the window. So, while AI can provide valuable insights, human interpretation and strategic thinking are still essential to navigate the unpredictable waters of the financial world. And then we have tax compliance and planning. AI can streamline tax calculations and help accountants stay up to date with changing tax laws. It can analyze complex regulations and suggest strategies for minimizing tax liabilities. But let's face it, tax codes are notoriously convoluted. AI might struggle with the nuances and subjective interpretations that come into play. Professional accountants still need to provide that tailored advice based on their expertise and understanding of individual circumstances. So, while AI can assist, it's not going to replace the human touch that's often necessary in tax planning. Now, let's get into fraud detection and risk management. This is where AI really shines. Its ability to analyze large data sets quickly makes it a powerful tool for detecting fraudulent activities. It can identify patterns and flag unusual transactions, potentially catching fraudsters in the act. But here's the catch: AI can also generate false positives, flagging legitimate transactions as suspicious. This can lead to inefficiencies and a lot of manual investigation. Plus, as fraudsters become more sophisticated, AI systems must continuously evolve to keep up. So, while AI can enhance security, it's not a foolproof solution. Human intervention is still necessary to determine whether a flagged transaction is genuinely fraudulent or just a case of a false alarm. Now, let's shift gears and talk about AI-powered advisory services. With AI handling the data processing, accountants can focus more on providing strategic advice to their clients. They can use AI-generated insights to help businesses with financial planning, budgeting, and investment strategies. Real-time reporting means accountants can offer proactive advice, helping clients make informed decisions on the fly. But here's the thing: AI can provide generalized advice, but it struggles with personalized, nuanced strategies that take into account a client's unique situation. Clients may also hesitate to fully trust AI generated insights, especially for complex decisions. So, while AI can be a valuable tool, it's not going to replace the human element that's so crucial in advisory services. And let's not forget about cost savings for firms. By automating processes and improving efficiency, AI can help accounting firms reduce operational costs. Fewer entry level staff might be needed, and firms can scale their operations without proportional increases in human resources. But here's the reality check: implementing AI tools can come with a hefty price tag, especially for smaller firms. Ongoing maintenance and updates can also add to the cost, potentially offsetting those initial savings. So, before we start celebrating the cost cutting potential of AI, we need to consider the financial implications of adopting these technologies. Now, let's address the elephant in the room: the shift in job roles and skills. As AI takes over routine tasks, the nature of accounting jobs is bound to change. Accountants will need to develop new skills in AI tools, data analytics, and strategic advisory. There's a fear that AI will lead to job displacement, and while it's true that some roles may evolve or become obsolete, others will emerge. The demand for accountants who can offer value added advisory services will increase. But here's the kicker: not all accountants are going to be ready for this shift. There's a skills gap that needs to be addressed, and resistance to change can be a significant hurdle. Finally, let's talk about the challenges and risks that come with AI adoption. Data privacy and security are paramount, especially when dealing with sensitive financial information. The risk of data breaches increases with AI's reliance on large datasets. And what about regulatory considerations? As AI becomes more prevalent, regulators may impose new guidelines that could complicate compliance efforts. The reality is that while AI has the potential to revolutionize accounting, it also brings a host of challenges that can't be ignored. So, is accounting at risk due to AI? The answer isn't straightforward. AI is poised to transform the industry by automating routine tasks, improving accuracy, and enhancing financial analysis. But this transformation comes with significant challenges. Accountants must adapt, learn new skills, and navigate the complexities of implementing AI technologies. The profession will evolve, but it won't vanish. Instead, it will shift toward a model where accountants become strategic advisors, leveraging AI to provide deeper insights and more valuable services to their clients. In conclusion, the conversation around AI in accounting is far from black and white. There are opportunities and challenges, benefits and risks. As we move forward, it's crucial for accountants to embrace these changes, to be proactive in learning and adapting, and to recognize that while AI can enhance their work, it will never fully replace the human element that is so vital to the profession. So, whether you're an accountant, a business owner, or just someone curious about the future of work, keep an open mind. The accounting landscape is changing, and it's up to us to shape it into something that benefits everyone involved.